Hello folks, how you doing? This is the Real Life Real Estate Investing Show where we talk about real life real estate situations, but we bring you real life real estate solutions. I'm your host, Glenn Glasper, affectionately known as Mr. Dollar Out of a Dime, and my guest today is the fabulous
Keline Bornelus.
Miss Keline Bornelus, and we're going to be talking about something that a lot of real estate professionals probably don't pay a lot of attention to, that it's very important in what we do, and that's insurance. A lot of times when I buy properties, or I've bought properties, I know that's the last thing that I have looked at. But I understand now, because of the
Very
time that I've been
important.
doing it, that it's very, very important. And it's very necessary in properties that we hold, that we fix up, and properties that we hold. So what we're going to get into today is talking about some of the things that we need to be paying attention to.
Sure.
So I don't want to steal your thunder and give your background,
That's okay.
but I'll let you do that. Tell us about who you are and
Sure.
what you do and
Sure.
all that good stuff.
Well, I'm Keline Bornelus. I'm the owner of Bornelus Insurance Agency, and as an agent, what I pretty much do is I offer insurance products to clients, both investors and homeowners, individuals. Some of my background is I've actually been in the insurance industry for about 18 years now.
Wow.
Yeah, I have some experience on the carrier side as both a claims adjuster, dealing with individuals and businesses, and then also as an underwriter, where we determine what type of risk. We review the risk to determine whether or not that insurance carrier fits that insurance carrier's appetite. So, pretty extensive background, and now I'm an agent.
Good stuff. Good stuff. So Bornelus, that's your agency that you started your own?
It is.
Okay.
It is.
Okay. So can we talk about who you're affiliated with, or is it just?
Sure. Well, I'm current agent for farmers.
Okay. Okay.
Yes.
Okay. Okay, so some of the things that I know I want to talk about, and I'm sure a lot of the investors that are watching are going to hear more about builders' risk policies, and I want to kind of get into that a bit. But on the surface, what are some of the things that you would say to a real estate investor that they need to pay attention to if they're buying a house to fix up?
Well, there are a lot of things a real estate investor can review when they're purchasing a home. Some of them are pretty similar to when you're purchasing your own home. An individual is purchasing their home, but then there are some things that they want to pay close attention to. So you have different investors. As you mentioned, you have the individuals that are going to buy the home and they're going to hold on to it. They may rent it out. And then you have the individuals that are going to flip that property. So they're going to be two different policies that you're going to be looking at. So they want to make sure that they get the right type of policy for what they plan on doing with that type of home.
Okay. Okay. So, like, I have a couple rentals now. So with rentals, I'm sure that's a different type of policy.
Yes. So when you're looking at someone that has a rental policy, they're going to get a landlord policy. And on a landlord policy, we want to make sure that you're not going to cover some of the personal property that you would if you had a homeowner's policy. So you're pretty much taking care of the dwelling itself. And then you want to make sure if something does happen to the home, that person that lives in that home, that's renting that home out, can no longer pay the rent, that you want to make sure that you're able to recoup some of that income. So there's some lost expenses, so to speak, that you can get as well.
Wow. So if the person that's living in the house can't pay anymore, I'm covered?
Due to a loss.
Okay. Due to a loss.
Due to a cover loss. Like, let's say a windstorm comes and the whole roof flies off.
Oh.
Of course.
Something like that. That's
something like that. Something major.
Okay.
Where that person can no longer live there. And, of course, the rent that you're receiving from them helps pay the mortgage at times, and that's part of your investment. So you're going to have a loss of rent, and you want to make sure that loss of rent coverage is in your landlord policy to help you during that loss while they're rebuilding that home back. And that can take some time. You have some homes, if you have a major loss, it can take up to a year sometimes. So you want to make sure that your loss of rent coverage is adequate.
Oh, yeah, I got excited for a minute. I thought you were saying that
not just any old thing.
They just stopped paying their rent.
That would be nice, wouldn't it? That would be lovely.
Like, yeah, we might have a few more tenants if that happens.
Right.
So with the loss of coverage, so you said like if the roof flew off or something like that, and I imagine that would be anything that would be causing them not to be able to live in the house.
Correct. So it has to be like a covered peril. So normally you have different type of landlord policies. So you want to make sure you have like a broad policy that will cover majority of the perils, wind, hail, theft, things like that. But if it affects the home and it's a major loss, you would want to make sure that you have the additional coverage to cover you if they did not stay there anymore. So they have to move out of the home at that time.
Got it. So how about in a situation where, so for example, I have one property now that's vacant, that someone's going to be moving in on the 1st.
Okay.
Hopefully, if they pay all their money, they'll be moving in.
Word, yes.
So I've had a policy, like a vacant property policy. What's covered in that? So for example, something like that. So it's just covered if someone vandalizes it or someone does damage or something like that.
Okay. So the perils can be the same. Again, it depends on the type of policy that you have. Okay. But yes, you wouldn't have the loss of rent on a vacant policy. Vacant policies are typically when we talk about individuals that are doing flips, then we would talk about, a vacant policy because that home is vacant the whole time. So the purpose of that home is for them to repair that home until they're ready to sell it. So on a landlord policy, you can have a landlord policy where it can be vacant for up to 30 or 60 days. So the most carriers are aware that you're going to be in the process of renovating that home, and it's going to be vacant for a period of time before you put it back on the market. So there is a period of time that you would still have coverage under a landlord policy where you don't have to switch it to a vacant policy because they're aware of that.
Got it. Okay, good stuff. So I want to speak more in depth to the investors that are watching. So for a property that someone buys to fix up, so we're talking about the builder's risk policy.
Right.
What are some of the things that are covered under that type of policy, and and how in depth does that policy go?
All right. So if someone's doing, if they're fixing it up, and it depends on how extensive a person is, how much repairs they're doing. So you may have someone that's doing just cosmetic repairs, some painting, maybe some siding repairs, maybe some minor roofing. That really wouldn't cause you to purchase a builder's risk, and that's something that a lot of investors aren't aware of. They just think, I'm repairing, I need a builder's risk. That's not always the case. As I mentioned before, you can get a vacant policy where it would cover a home that is being repaired for some minor damages. Maybe those repairs would be done within 60 days. You can get a vacant policy, which sometimes is a lot cheaper than a builder's risk policy. When you're looking at a builder's risk policy, you're talking about a home that pretty much just has the foundation and the you pretty much demolishing the home to repair it. So that's where you're doing some of those major repairs. You're breaking down walls. That's where you're going to look at a builder's risk. A builder's risk is going to cover you for some of the supplies that you bring on the property. As you know, those homes are normally vacant, and they may become a target for individuals to take some of that property, some of those supplies, roofing materials. Other contractors may have their eye on what you got laying around. So you want to make sure you have theft coverage. You want to make sure you have vandalism coverage, because individuals in the neighborhood may decide to camp out. You never know. I actually had a claim where it wasn't a claim, I'm sorry, an individual that was shopping for insurance, and they had a previous claim where they were in the process of flipping the property. They acquired it from someone that passed away, and the home was vacant for a while. Some individuals just stayed in the home, and the home caught on fire. So, yeah, you want to make sure you definitely have vandalism. Insurance companies do notice that that's a higher risk when the home is vacant, and definitely when it's up for major repairs.
So you said something that I don't know if a lot of investors are aware of. You said theft coverage in the builder's risk policy. Does that something that comes within the policy automatically, or is that something that an investor needs to be aware of?
Normally, they would definitely want to make sure that they have, it depends on the carrier, but they want to make sure that that coverage is provided on a builder's risk. Typically, it is provided on a builder's risk policy because that's what you're looking at, the additional supplies that you'll have there. On a builder's risk policy, what they're looking at is the amount of time that it's going to take you to rebuild that home to finish your repairs. So you want to make sure that you insure it to the proper amount that you think the home will be worth once the repairs are done. There's normally periods like 30, 60, 90 days, periods where the coverage will increase based on your repairs.
Okay. So if I bought a house for $50,000 and the repairs are $20,000, you're saying that it would be in my best interest to get, so and the house is going to be worth $150,000 after I'm done.
Oh, you said 50 and 20,
yes.
70?
So it'll be worth $150 after I'm done. So I should get a coverage amount to cover the $150 or just the $70?
Okay, so you definitely want to get a coverage to cover the whole thing, the $150.
Okay.
That's what you should do. Also, it's important to look at the replacement costs. A lot of people are looking strictly at the amount that they're putting into the home, but the replacement cost sometimes is also important. So it may cost more to replace that home versus how much it costs just to repair it.
Okay. So and how do you come across a value for something like that? So for example, would there be an appraisal done of some sort to determine what's going to be worth after it's fixed up?
Well, for a lot of insurance carriers, we have guides that we use to determine replacement costs. There's a couple of systems out there, and they don't vary by much. But we have systems that we use that will determine how much the replacement cost of that home would be. And we don't really look at the market value. I know a lot of realtors and investors are looking at how much they purchased the home for. But if you're looking at replacement costs, then there's a replacement cost guide that we would use to insure the home. But again, it depends on how much the home is going to be worth. If it's a quick flip, you might just decide just to do the value of, as far as how much you purchased the home and the amount that you put into repair.
Got it. So that is an option.
It is definitely an option.
Oh, okay. Okay. Good. Okay. So in a policy like that, if we only did the amount to cover the house, the amount that we paid for it, and the amount for the repairs, would that be something that would include that theft coverage that you mentioned, or is that going to be included in the?
No, it definitely can include the theft coverage. The theft coverage is always a must when you're talking about builder's risk and when you're talking about vacant home. And you definitely want to have theft coverage because of the supplies that are going to be out there. And that's one of the main reasons contractors and individuals that are renovating their home purchase builder's risks because of that theft coverage.
Got it. Good stuff. So, in a situation, so I guess, well, let me ask you this way: if they were covered, and so I guess I want to kind of get to the deductible. Like, what would it be worth? I mean, because I've had houses that people come and stolen things. I mean, it was probably $500, and I had a $1,000 deductible.
Yeah, you definitely don't want to, well, let's talk about how deductible works.
Okay.
For the insurance company, when you have a deductible, you're sharing the risk with that insurance carrier.
Yes.
So you don't want to continue to file claims for little small incidents, like you said, $500, even $1,000 on claims, because then that's just going to make your premiums go up. So the higher deductible you have, the lower your premium is. So with the deductible for investors, normally they have contractors on hand. Normally they've purchased the property for a very low rate and they're just putting the funds into it. So I actually suggest for an investor to maybe have a higher deductible, $2,500 to $5,000. It would prevent them from filing claims on these minor losses and in the long run increasing the rates.
Right, yeah, because I have seen, so insurance rates have gone up recently.
They have. I think most carriers have.
Insurance.
Don't say
I'm just
that.
kidding. I'm just kidding.
They've
Then
gone
we
up.
beat it.
And it's so many factors. I tell my insureds that it's involved with the rates, definitely with the way the economy is going.
Natural disasters and things like that.
Yes. So when the insurance company, we share when we get when we have a natural disaster, of course, we're spending millions on fixing these homes back up. And then we have to go back to our insureds to kind of recoup, to pay for these claims that are occurring.
Got it. Yeah. So when, I guess, it's something I've been curious about that might actually help the viewers as well.
Okay.
When you say, so these insurance companies, I guess they have a pool of money that they get from the people that pay the insurance that probably never use it.
They all don't use it, but some do.
Right, but that's how they pay for. That's where they get the money to cover the losses and things like that.
They definitely use those funds. The premiums are what they use to pay for the loss. Of course, there are other things that are involved in that, the invested portion, whatever. But they do use the premiums to pay for claims.
Okay, all right. So you mentioned having the right amount of deductible. I know on one property I had, I think it was like $2,500 or $5,000 in deductible, and I think on that property someone stole the AC unit.
Okay.
And it was probably close to that amount.
Okay.
I was like, man, I should have got that $500 deductible.
Well, if you would have gotten that $500 deductible, you would have paid a little more in insurance. I mean, it's up to each individual. It depends on how comfortable they feel when a claim does occur. If they feel comfortable paying $2,500, or if they just rather, have the insurance carrier pay for it. But like I mentioned, if you did have the lower deductible, your premiums would have been higher. And then if you would have filed the claim, your next policy premium would have been higher. So, you're either going to pay in the beginning or towards the end. Either way.
That's how insurance gets you.
Either way. It evens out. It evens out.
So you have a higher deductible, and then you file a claim, so you're covered for the things that you lost. But when you go back again, your premium's higher.
Well, the way, on the positive end, insurance is really there for those major losses. So if it's, I understand you said your AC was stolen, if it was around $2,500, but let's just say that whole home blew down, you had a $2,500 deductible. Right. If it was a $100,000 home, then you would see where the benefit of the insurance would come in.
Got it. So a little bit more on deductibles. What I come to understand about home insurance deductibles is you don't, like in car insurance, and correct me if I'm wrong, I'm not an insurance person at all. I know in car insurance, when you have a loss, you have to pay that deductible in order for the car to be repaired or something like that.
Yes.
But in the case of a home, they just deduct the amount from the deductible to cover the amount that it would cost to repair the house. So, for example, if your roof blew off, like you said, and it costs $10,000 to replace the roof, and you have a $5,000 deductible. Okay. So that means that they'll cover the $5,000, and you just have to pay the additional $5,000.
Correct. So definitely, that's exactly the way it works. And then you also, again, want to make sure, it depends on the type of policy you have. As I mentioned, replacement cost is always best if you're able to get that, if that's something you're able to do. But if you have an actual cash value policy, then that works a little different. With an actual cash value policy, they're going to look at depreciation at that point. So we want to know how old the roof is now, and if it's deteriorated, then if it's cost $10,000 to replace, but it depreciated, and now we have $2,000 of depreciation, then that's $8,000 now.
Wow.
Got a deductible of $5,000. At the end of the day, that's $3,000 that they're paying out. So, so you got to look at it that way as well. What type of policy you have, how is it going to pay out? And those are things that people don't pay attention to. They'll get the policy and they don't know whether or not it's replacement cost or actual cash value. And it's important for you to know, so when you have a claim, you're not surprised by some of these things. And whichever you decide is fine, but just, you should know exactly what you've purchased.
That is very, very good information. I want to acknowledge some people that are joining us. We have Mr. Stafford. He's so crazy. Thank you, Mr. Stafford. He said, that boy clean. He's so crazy. Ms. Burkall, thank you for watching. You probably should be at work, but thank you for watching anyway. We have a question. We'll get into questions a little bit later in the show, but I want you guys to make sure, because I know she's giving some very, very good information. I want to make sure you guys are, putting your questions in so we can get those questions answered later in the show. But Michael Williams, to your question, I want to make sure we get a little more detail on it. He said, what about fire? But I don't know specifically what he was asking. So if you're still with us, Mike, go ahead and put that question in again below so we understand what the question is specifically about. And we have Ms. Mika McClendon. Oh, okay. I was gonna say, you know Mika McClendon?
Yes.
Oh, okay.
Hey, Mika.
Hey, Mika, how you doing? Because the big sister I always never wanted.
Okay.
Thank you for watching, Mika. She said, hey, Glenn. Then she said, hey, Keline. I was going to say, she's speaking to you before she's speaking to me.
Oh.
Come on my show talking to somebody else. No, I'm just kidding. Michael said you already answered the question. So very good.
Okay.
Very good.
All right.
Yeah, so for those of you that are joining us or that have just joined us, please go ahead and share this in your news feed, share this in the groups, share this in the business groups, real estate groups, especially the real estate groups, because this is some very valuable information that we need to have as investors. She said, hey there. So we were talking about deductibles.
Mm-hmm.
I want to get a little bit more into that, but I want to go back to where we started from the type of policies that investors should have. So is there a difference? Is there a different type of policy besides a builder's risk policy that investors should have? I know you mentioned the landlord policy.
Yes.
But something specific to where we're doing repairs.
Okay, yeah. So when I think of investors, I think of these three policies. I think of the landlord policy where they're renting it out. Mm-hmm. I think of a vacant policy where their plan is to actually flip the policy and it doesn't need major repairs, and that's when they're just doing some of the cosmetic. And then you think of the builder's risk. So those are the three type of policies that I think of for investors. And I think your question was geared towards the vacant policy, possibly. Yes. Mm-hmm. And that's what I was mentioning. If you're doing a vacant policy, then the difference between, of course, all of them is they increase the more the individual, the further away the insured is from the home. So if you have a property that the insured isn't residing in, it's now an investment property. It's going to fall in one of those three categories. But on the vacant property, you want to make sure that, the repairs are going to be done within 60 days. Mm-hmm. You want to make sure there isn't any major repairs. Like I said, we still have a foundation. We still have, it's pretty much cosmetic, light work being done. Mm-hmm. And again, on the vacant property, you want to make sure it has that vandalism coverage as well.
Got it. Okay. So you said something I want to make sure I know I'm curious about. Mm-hmm. You said the further away from the property that the investor is going to cost more?
Well, the reason I say that, because I compare it to a homeowner's policy. So if the insured is living in the home, and it's a homeowner's policy, typically the premium is a little less. And that the insurance carrier is reviewing the risk. So if the insured is there, then more than likely less things will happen. If you have a vacation rental and the insured is there some of the time, then you can tell the premium will go up a little more. Versus a landlord policy, then it starts to go up a little more, and then a vacant policy or a builder's risk, those are typically where you're going to find the highest premium, just because the insured is not there as much. Mm-hmm.
Oh, okay. So I got a question about this particular thing. So I lived in the same city, and I moved across the road.
Okay. I think I know where
you know where I'm going.
Yes.
When the zip code changed.
Yes.
How did my premium go up?
You moved across
$500.
It's so possible. As I mentioned before, there's so many factors that go into rating, and where you live is definitely one of them. Mm-hmm. So the reason why typically your rate may have gone from one premium to the next is because before you even move, the insurance carriers have already filed their rate for that area that And it may be they may have it may be more congested, and they may have more claims in that area, and that may be an issue. It may be older houses in that area, and that might be also a factor. But I don't know, what the issues, if you're referring to homeowners or auto insurance, the houses may just been different, and you're not going to get the same premium for two totally different houses anyway. So there, it depends on. I would have to kind of look into it a little deeply to kind of tell you exactly why the premiums differ. But the homes definitely play a role. Where you live plays a role. So it just depends.
Okay. Yeah, it was in fact, it was the car insurance and the homeowners insurance that was different.
When you tell me the car insurance, I can kind of narrow it down to is possibly due to the location. And if it was more into the city, normally you'll find more the premiums get a little higher the closer you get to the city. So that's possible. Okay. More people, higher premiums typically.
Now, does it have anything to do with demographic in the area? I'm going to say it the politically correct way.
Well, I can't say that insurance companies can't do that.
Okay.
But when we look at it, sometimes the demographic sometimes can play a role into claim activity, things like that that's going on. So it may not be in their guidelines that because of the demographics we're going to increase the rates. But, sometimes we know certain areas that have higher rates because, and it's unfortunate that, it's certain demographics that are in that area.
You're real good with this politically correct.
I'm trying. Try not to say anything wrong.
Yeah, because the people are watching.
Yes.
No, but I mean, it's understandable, though. I mean, because in different areas there's higher crime and things like that. So, of course, it makes sense. It makes sense for the rates to go up. We don't like it, but
no, we don't.
It is what it is.
And we choose where we live as well.
Yes,
so,
yes. Okay, so along with that, let's talk about the. I want to get into a little bit more about rates and how rates can be, I guess, vary in a sense.
Okay.
And tell me some of the factors that go into. Of course, we talked about the areas that the house is in.
Okay.
What are some of the factors that go into rating?
All right. Well, there are a lot of factors that go into rating. As I mentioned, you're looking at the home. So we can start there. When you're looking at a home, they differ. One home could be made of siding, vinyl siding. Another home could be solid brick. Right there, you already know that the replacement cost of that home is going to be increased because of the materials that the home is made of. It could be marble versus carpet on the inside. So we're looking at different features when we're talking about the replacement cost. So the first thing that I do when I talk to my insurers is I determine, we go over all the features of the home, try to make sure that we have that as accurate as possible. Back in the day, we used to go out and go to each home, take pictures, and do measurements. We don't do that anymore. It's saving us a lot of time. But what we do rely on, sometimes we go online and we look at photos there, and we rely on what they're telling us. Sometimes we may get an appraisal that will help us in looking at some of the, determining some of the details that are in that home. So with that, we can determine a replacement cost. Once we have the replacement cost, we can kind of understand the value of that home to replace it. Then it also looks at some of the features of the insured. So how many claims have this insured had in the past? That may be a factor. Their credit, unfortunately, also plays a role.
Did y'all hear that?
Yeah, credit is a big one. So if you have poor credit, normally you'll find sometimes twice as much. You'll be paying twice as much as premium as someone with good credit. Wow. So credit definitely plays a role on your insurance, both auto and home, and the discounts that they apply for. A lot of people forget, especially new homeowners, if they're looking at a home, that they can get a discount for someone if they have a new roof on the home. If they've had some other renovations, like you said, you got that AC repaired. Did you notify your insurance agent that you got a new AC? That's a discount, So that's definitely a discount. So those are some things that people don't look at. And, of course, the deductible, as we talked about, that may play a role into it as well. And a lot of carriers now are providing the multi-line discount. So if you're able to combine the auto, the home, the life, the umbrella, then you get the additional discounts on your home.
Wow, that is good stuff. So let me ask you this. You said something also I want to make sure I because this is good education for me.
Oh, okay.
So if I decided, well, I'm in the midst of deciding, hopefully my wife is not watching this show,
okay,
when I'm going to renovate our house.
All right.
So if we were to do our personal residence, now for how I'm looking at doing it, she wants to just paint and then do something later. I want to do everything all at one time.
All right.
Where we're possibly going to have to move out of the house for maybe a few weeks to maybe a month or so.
Okay.
Would my policy change if I did something like that when I'm doing the renovations?
Well, depends again on how detailed your renovations are. So you can always talk to your agent to determine, let them know exactly what you plan on doing, because they may have to, again, update the replacement costs if you're changing, making some major repairs. If you're putting a deck on your home, that may increase the replacement costs. Of course, the painting, that's really minor. That really is not going to have any effect. But if there's any major additions or repairs that you're doing, it may have an effect on your coverage, and then again affect your premium.
Got it. Okay. So for something like redoing the floors and
flooring,
kitchen, doing the entire kitchen and all
additions, changing if you have just like you mentioned, changing it from carpet to tile, that may be minor, but that can adjust the replacement costs a little bit. If you have a new roof, that can also help, but you want to notify your agent if you're changing it from like a flat type roof to architectural roof. They should know that as well. So just again, have a discussion with your agent. Advise listeners to talk to their agent, or give me a call, and they can definitely kind of advise you on what you need to do.
Okay. And that's a good question Mr. McCoy has. We'll make sure we get that. So you said discount for a new roof. So would that mean like anything how about new windows? So any efficiencies, would that help with?
I haven't seen new windows yet, but the type of windows that you have may play a small variable into the replacement cost, but it's not a discount. I haven't seen that as a discount. But the roofing, if you've done a complete renovation on your electrical work or plumbing, and the HVAC systems, those are the primary four that I've seen for most of the carriers that I know of. There may be some out there that I'm not aware of, but I haven't seen windows.
Okay. So I did, in my personal home, I did have to replace the AC unit because a month after I moved in, it went out. So is that something I should notify?
You most definitely should notify
Really?
Your insurance agent, because that can possibly be a discount. And like I said, all carriers are different, but most carriers I know use the HVAC system as a discount. And I tell people to hold on to those documentations, especially if you're moving into a new house and the seller has said that they've made some repairs. Ask for that documentation before you move in, and hold on to it for at least 10 years, because most of those discounts last for about 10 years.
Oh, wow. Wow, okay. So, yeah, I'm going to make sure I do that, because, like I said, we replaced our unit maybe about a month or so after we moved in. And the terrible thing was the warranty didn't cover it, because I'm going to tell the truth. I'm going to tell on myself.
Okay.
I'm going to tell on myself.
I don't want to get you in trouble.
But it's okay. I'm honest. So I'm a real estate investor, and I think I do okay with inspecting houses. I'm not an inspector, but I do okay with inspecting houses because I've been doing it for a little while. So I did our inspection on our personal house.
Oh, okay.
So we didn't get an inspector. So when the home warranty, we called the home warranty people out to repair the AC, they said because we didn't pay for a professional inspection, they didn't cover the AC unit, in the home warranty.
Right.
It's like, wow.
Yeah, if you're going to do an inspection, I would definitely suggest get someone that's licensed and insured to come and do that.
Now they tell me.
Yes.
So, Mr. McCoy asked the question. He says, is there a different type of insurance for condos and homes?
Yes, there is. When you're looking at the condos, you want to make sure it's totally different type of policies. You're actually insuring not the complete building, but the inside walls and everything on the inside. On homeowners, we're insuring the complete structure. So condos are a little different, and you want to make sure that you have the right policy when you're talking to your agent.
So I guess that's interesting. So if something happened to someone else's condo or apartment, well, I guess condo when we're owner, if something happened to someone else's condo and it affected mine, would that be a policy for me, or should their policy cover mine as well?
Well, that's a good question. Normally on any type of, if someone causes you any injury, whether it's bodily injury or property damage, that's a liability claim. So if they had a fire, and let's say that fire reached other units, then they would have coverage under their liability portion of their policy. And that works the same for whether it's a home, a renter's policy. Regardless, that liability is going to help cover them for causing damage to someone else's property.
Got it. Okay. And that's a good lead into another question that I have about a renter's policy. So, as a landlord, we require our tenants to have a renter's policy.
You should.
But in many cases, from what I've seen, it's only maybe $4 or $5 or $10 for them to have a renter's policy.
Yeah, it can be very inexpensive. I'm not sure about $4 or $5.
Okay. It's like, no, don't quote that. She didn't say that, I did.
But it can be inexpensive. We're talking about $10, $20 at the most.
Okay.
For renter's insurance. And mostly with renter's insurance, you want to make sure that it has liability coverage on there. That liability coverage is going to protect that landlord. If that renter was to damage that property, then you're going to have somewhere to fall back on. It's also good practice for that landlord to request a copy of that renter's insurance so they can contact that carrier if something was to occur, and they'll have their policy number. So a lot of apartment complexes now are actually requiring that they be listed on that policy. So if there's any changes made to that policy, let's say for instance that person doesn't pay, that landlord or that apartment complex is notified that that didn't happen. So it's a good practice for also a investor to maybe require that their tenants do the same. Put them on the policy as an additional interest.
Okay, that's the part I think I missed. I don't think I added myself as an additional interest.
Yes.
I just made them get it.
If you do that, you're notified anytime that there's something that's occurring.
Oh, okay. It's like if they have a claim or something like that.
Well, not if they have a claim, but if there's a policy change, if they change the limits, normally you're notified, or if they cancel, the policy's being canceled, you're also notified.
Good stuff. Okay, yeah, because I think some of them get it and then they cancel it.
Yeah, as soon as they get it, they show you, and then that's that.
$10.
Yeah, it's not expensive.
They probably got a cell phone in the house worth more than
I mean, it's really not expensive, especially when you think about everything that it covers. You're getting they're not only having the liability coverage, but they also have the coverage for them if that fire was to happen or something major, and their personal property would be covered as well. So.
Got it. So in a situation, I mean, I guess a little more deeper into something like that. So if I've seen a couple of apartments, burned down, and families are distraught or displaced. In a situation like that, what coverage would help in that sense? Would it be the apartment building coverage, or would it be only the renters coverage?
Well, the renters coverage, if the person caused a fire, then their policy should be able to cover them. They'll cover the liability where they'll cover the building itself. Then they'll have their personal property coverage that will cover them as well. And then there should also be coverage if they needed to stay in a hotel or another home. There should be coverage in that policy for that as well.
Okay, so that would be for the apartment complex owner. Or is it just a renter?
The renter will have coverage,
okay.
yes.
Okay.
But they have coverage to cover the owners, their building.
Okay.
So that's where that liability portion will fall into play.
Okay. So for the owner, their liability, how much of their liability covers The
Now,
tenant.
the liability is if they're responsible, if they're held liable for something.
Oh,
So if the owner
okay.
is not liable, like they didn't have any faulty lighting or something like that, that caused an issue, then normally you're going to fall back onto the tenant.
Mm-hmm.
Now, let's just say that tenant didn't have any coverage, then I'm assuming the apartment owner, they can ask if they have coverage, they can use their own building coverage to cover that building.
Mm-hmm.
But they're gonna that insurance carrier is gonna try to subrogate back to the renter
Mm-hmm.
and try to seek coverage from that their carrier.
Got it. Okay. So I guess to make sure I understand, so it will be optional for the apartment building owner to cover the tenant.
It would be optional to cover their damage.
Got it. Okay.
They're just going to cover their damage. They're not going to cover that person's personal property. They're not going to be responsible for putting that person up in another location.
Mm-hmm.
But they would have coverage to cover their building. And then if they didn't cause the damage, the insurance carriers are always trying to figure out how can we get our funds recouped.
Mm-hmm.
How can we recoup our funds? And we weren't responsible for this. Who was responsible? Was it the person that did the repairs a month ago? Was it the person that was living here? So that this is the adjuster in me thinking.
No, that's good though. It's good information though.
So the adjuster that's working on that claim, they're going to do a full investigation. Although they're going to take care of the apartment complex and make sure that they're back to where they were before. Mm-hmm. And that once it's done and over with, they're going to try to recoup their funds.
Got it. Okay. So that's good information. I mean, because I'm actually looking into commercial properties now, so that's good to know.
Yes.
So to think about something like that, it makes me wonder why more people don't have renters insurance. People that are renting, why wouldn't they have that coverage to cover themselves in the event something like that may happen?
I mean, it's a good question. Everybody needs some type of security when you're protecting some things like that. You put so much into the things that you have in your home. If you're talking about homeowners insurance, you need protection, and that's what the insurance is for. And you never know. It's for those situations where you just don't know. And we do see these homes when we drive by, and it's so sad that they're put out their home, and now they're tasked with trying to find another place to live, or how they're going to pay for the damages that they just did. Mm-hmm.
Well, I just had a thought. I'm probably not going to share it, but
okay.
I mean, it's so interesting that we have cell phones
mm-hmm.
that have insurance on them, where we pay like $10 a month for the insurance.
Yes.
And we don't have insurance for our entire place that we live in some cases, where it's some cases it's $10 a month if you're a renter.
Yes.
But then the other side of that, it's probably gonna be another show. But there's life insurance.
That's a financial show.
Right. Life insurance is $20, $30 a month, and people don't get life insurance.
Yeah.
Yeah, but we'll talk about that later. That's gonna be on the other show.
It's true though. It's true.
But it's things like that many people don't see the need to pay for those things because they don't see it as something that they're going to use right away.
Mm-hmm.
But we all know, I mean, most of us know that in life, who knows what's going to happen.
We don't know. Mm-hmm.
So I have insurance for everything.
Yes.
Now I'll be honest, I didn't always think like that. Mm-hmm. I wasn't always aware, or as our folks say, stay woke. I wasn't always awake.
Uh-huh.
But I understand that with anything in life, there is a chance that something can go wrong.
Yes, especially for investors.
Mm-hmm.
There's some investors that have multiple properties, and when I talked about the liability portion of it, they don't think about the umbrella coverage that can also assist them, which is an additional liability coverage. Mm-hmm. When I talk to people about what liability does, not just if you were to cause something to that person, but it also take care of you as far as the attorneys that you may need if someone was to file suit against you.
Mm-hmm.
That is kind of the major cost when you're talking about someone actually you're causing damage or injury to someone. The first thing they're going to do is sue you.
Mm-hmm.
The attorney sometimes costs more than it does to pay the attorneys than it does to actually repair or their injuries. Is the legal fees that kind of rack up pretty quickly. So that's where the liability coverage will come into play. And I suggest people, if they net worth is in the millions, I suggest them get an umbrella policy.
So I should get an umbrella policy?
You probably should.
I'm just kidding. But no, that's good information though, and I guess it's time for me to do a pause for the cause. I should have did our events section a little bit earlier. Our regular production assistant would have known to tell me that.
Okay.
But no, I just want to mention a couple of events that we have going on that are coming up. Actually, I got to make sure I remember all of these. There is June 9th, we have the Shark Tank style real estate investing again at Coconut Grill. That's happening June 9th, 11 a.m. to 1:30 p.m. Then we have the unsecured funding Zoom call that's going to now be happening every Monday. Every Monday evening at 7:30. We may do a replay on Tuesday, but every Monday evening at 7:30 we're going to be doing that. We also have Detroit, June 16th. We're going to be hosting an event, wholesaling back to the basics. And there's one other event that I'm supposed to mention, and I can't remember what it is. But that's okay. I will remember it later, and I'll post it in the comments later. And those of you that are just joining us, a few people just came on, go ahead and share it in your news feeds, share it in on your timelines and things like that. But if you have any questions, please be sure to go ahead and drop your questions, because she is giving some amazing information. A lot of stuff that I wasn't aware of. I'm going to go home and check my policy now. But if you got any questions, make sure you go ahead and put those questions in the comments. We have, actually, Mika has a question. Let me see if I make sure I get this right. If you have sold your home, but you need to rent from the new owners until your new home is ready, 30 to 45 days, is there a rental insurance coverage you would recommend for a short time frame?
Well, most renters insurance, it's a year.
Okay.
She's asking for a short period of time. Most policies you're going to find for renters insurance is a year, but you can cancel a renter's policy at any time. And once you purchase a new home, you can go ahead and talk to your agent. They'll change that, or you can get another homeowner's policy. So, but no, on renter's policy, you won't find any renter's policies for 1 or 2 months. It's going to be a year policy.
Okay. Okay. So, is it most cases that, because I know some builders risk policies we were able to get for a year, depending on what for 6 months, depending on what the lender requires in some cases. Is it most of them that are a year policy, or can we determine that?
You can determine on the builder's risk how long you want the policy to last, not only until the project ends. So you can determine, I guess, depends on the carrier. So there are periods of time. If it's not going to last a year, then you don't necessarily need a year policy.
Got it. Okay. So,
and I wanted to add one more thing. I'm sorry.
I
thought about it. Mika's question. She may want to get in touch with her agent, because if she's not moving, even though you've sold the home, your personal property would have coverage for a certain period of time, even though you don't own that home at that time. So in between moves, I believe it's normally like 30 to 45 days. So she may want to just check with her agent to find out how long does she have before she would need another policy.
Now, this is for the house that she sold or is selling? It
sounds like she's still living in the same home.
Well, I read it again, and I think I got it right. Mika always confuses me some kind of way or another. She gonna punch me in church on Sunday. I ain't scared of her though. Okay. No, I think she's saying that she sold a home, but they moved into a new property that they're renting. Okay, got it. Okay, she said correct. She moved into a new home that she's renting for 30 to 45 days.
Oh, okay.
Yeah, so she wanted to know if there's a rental insurance coverage that she would recommend for a short time frame.
Okay, I'm sorry.
She said, yes, I am.
Okay.
But I said she gonna punch me. So I think she's asking about a short time frame rental
yes. So
policy.
I answered it correctly the first time. Yes, okay. In that situation, no, you can just still get a renter's policy, and then when you are ready to cancel it, you can notify your agent and do so.
Okay. Okay, now she said something else. No, we are in our old home. No, we are in it. She said Keline is correct. Okay, then. Okay, because I don't know what you're talking about. But you answered the question, which
Okay,
is what's
got
important.
It. All right.
But I mean, now I want to make sure it's clear for the sake of the people that may be confused, like me. So she's in her old home. Why is she asking about a rental policy for 30 to 45 days, though? Let me read this again. Come on, Mika, help me out. If you have sold your home, but you need to rent from the new owners. Oh, I got it. She sold the home, but she's renting from the new owners of the home because she hasn't moved out yet.
Okay.
So she's wanting to know, you're renting the house that you sold, right? Okay, that's what I'm going to... In the old home until the new home is ready. Got it. That's what I said. Okay. Thank you for keeping up with me, though. So she's in the old... She sold the house, but she's still living in the house that she sold until the new home is ready.
Right.
So
anytime you've moved from one property to the next, there's a period of time that you have to notify the agent, say, hey, I don't live here anymore, and there's a period of time that there will be coverage still extended to you. And like I said, normally it's about 30 days, but again, that's be a great question for her agent to verify. Look at her policy and verify the amount of time that she would have before she would need another policy. In any case, if she did decide to get a renter's policy, then she can still do that and then cancel it once she decides to get into her new home.
Got it. So for a rental policy, do you have to pay? Now, is that something that you can pay monthly, or do you have to pay it all at once?
For most policies, you can pay them monthly.
Okay.
So she can definitely pay that on a monthly basis, and then again, once it's time to cancel, just notify them.
Okay. Good stuff. Mika will have the most difficult question to answer on the show. But it's a good question, though. Thank you for the question, Mika. We do appreciate you watching, and I'm gonna have to steer clear of her on Sunday because
I didn't know you guys went to the same
church.
church.
Yeah, she's a bully.
Okay.
I know I'm here about that too. This is my show. I can say what I want to say. No, so she said, got it. Thanks, Helen. Okay, good stuff. All right, so it was something else I had about the policy, the landlord policy. So you might have answered this already. Forgive me. Mika confused me, so I got to go back and make sure I'm clear on it. And it's for the sake of the people that are watching as well. I want to make sure, for the viewers that are watching. This is not just about me asking you all the questions I want to ask.
Okay. That's all right. You're asking good questions.
Okay. But it's for the sake of the people that are watching as well. So as a landlord owning property, it is in the best interest of the tenant, of course, to get a renter's policy. Now, I learned to enforce that, and I don't recall why. I'm gonna be honest. I don't recall why. Now, what is the benefit for a landlord to enforce a tenant to have a renter's policy?
Okay, so it is their benefit. For them to have renter's insurance, but it's also benefiting you.
Okay.
So the reason that it's benefiting you is, like I mentioned, if they were to cause some type of major loss, like that fire, I always use that as an example because that would be the worst case scenario. More than likely, that renter does not have $100,000, $200,000 to repair that home. So you would be in a terrible position if they didn't have any renter's insurance. You can fall back on their renter's policy and actually repair your home back. So that's why it's important for them to have renter's insurance, because you don't have to make a claim on your policy. You're not filing a claim on theirs.
Got it. Okay, that makes absolute sense. I'm going to continue to enforce that.
Yes.
I know I learned that years ago to make sure your tenants have renter's insurance.
Right.
But I just thought it was so that, and I guess it makes sense that it wouldn't be any reason that we would have to cover any loss that they have.
Exactly.
But
now you're going to put yourself on as an additional interest.
Yeah, absolutely. To make sure if they cancel, we know that they
you're
cancel.
You're notified, exactly.
Okay, good stuff. So, and this show, this is the reason why we do this. I mean, because it's educational, of course, for the audience, but it's also educational for me.
Right, we'll learn things. That's a good thing.
Yeah, and that's one of the things that I want to make sure, James, how you gonna have her back and I have mine? He said, I got your back, Mika. I'm not. I'm not messing with y'all. But no, that's the reason why. Like even as I was sharing with you earlier, when I started the show, it was basically about giving people exposure and helping people understand the different things that go on in our business. It's real estate investing. And as it grew, I understand more and more that this information is a lot of times what many people don't pay a lot of attention to. You know, insurance is something that's truly major in our industry in real estate investing.
You're right.
And many people will just get a policy just because the lender said they had to.
You're right.
And don't pay attention to all the details that are involved in those policies that they get.
You're right, and it's very intensive for them to kind of review every line in a policy. And like you said, you haven't looked at your policy in quite some time. I'm sure it's pretty thick.
Yeah.
So that's why it's good to kind of actually talk to your agent every so often so you can have an understanding of what's in your policy. And as things change, as you get more properties, as you make renovations, there's things that they can kind of inform you about that you need to update on your policy. So I would say it'd be good practice every year or every 2 years to talk to your agent so they can talk to you through your policy. So you want to, I don't expect you or any common individual that's not in the insurance industry to know every line in their policy, but that's why you would have that good relationship with your agent so they can kind of talk you through it.
Good stuff. So this time, we're at about 5 minutes before we wrap up. But what I want to do is give you an opportunity to share with the folks how they can get in contact with you to learn more about insurance.
Okay.
And not only that, I mean, how they can do business with you, of course. So how can some of the people get in contact with you?
Well, they can definitely reach me by phone. We have an 800 number. It's 800-376-8967. They can definitely reach us through Facebook. We have a Facebook page as well, the Bornelus Insurance Agency, and that's spelled Bornelus, Bornelus Insurance Agency. And from there, they can reach out to me. I definitely respond by email as well, and that's kbornelus@farmersagent.com. And I respond same day. So definitely different ways of contacting me, but definitely I'll reach out to them.
And you have the best rates in the industry, right?
Of course we do. Very competitive.
Of course you have to say that. But, you know, it's very valuable. You know, one thing people look at is cost over value in many cases. For, you know, even talking to you now, just getting the understanding of how a lot of it works, a lot of the more in-depth information behind the scenes. Yeah, I might pay a little higher premium, but the value of the information that having a personal agent would bring is far more valuable.
You're so right. You know, we're at a time where a lot of people are going online. They're shopping for insurance online, but they don't understand there are certain things that they may input online that may not be beneficial for them, or they don't understand that once they put those details behind the scenes, the carrier are now going to do a check on their claim history. There may be other factors that may be involved. They're pulling their credit. So talking to an agent, getting that information up front, not only is most beneficial to them, we can talk about some additional discounts that they have. And then one thing that varies from one agent for the next is the service that you're going to receive after you purchase the policy. I think that's what's most important. You don't want to try to reach out to an agent and you can't reach them. So there's a lot of things that they can look at when they're comparing one carrier for the next and one agency from the next.
So I'm going to ask. I'm going to play devil's advocate a little bit. Ask a question that I know I want to know. Maybe some other people want to know as well. So with the different insurance companies, and I know you have a little bit of bias with your company. What would you say as an insurance agent? What would you say differs from one agency to the next, or the companies to the next?
The carriers. Well, one good way to measure one carrier from the next is you can always go and pull their ratings. Standard & Poor is a rating company. Moody is a rating company. You can go online and compare the carriers that way. So you're looking at how do they handle claims. That's one big thing if they not paying their claims on time. the service that they're providing once a claim is filed. Also, the service, are you able to reach them? Do they have a 24-hour customer service number that you can reach them at any time? Can you pay your bills online? So those type of ease of doing business are some of the things that you can use when comparing one carrier to the next. How long have they been around? What's their reputation? That's also another thing that you want to look at. I know there are a lot of carriers popping up, but they may not have the best reputation. Their premiums may be low, but you sometimes get what you pay for.
So when we bought our house, I already had State Farm for the cars and stuff like that. So we just went with State Farm for the home and everything. But our agent it's not personable like that. Like, I mean, I dropped the remote and I said, like a good neighbor, and I thought I was going to be able to get the remote. It didn't work. That's not how that works.
not how it works at all. Well, definitely, if you've tried reaching out to your agent and that person is not a good fit for you, sometimes you do need to move on. So it's all about, I think about when you're talking about a sports, someone that's an athlete and they have an agent, that person should have your back and they should be available for you. The same with insurance. We're there as a mid-person between you and the carrier, so you want to be able to reach out to us when you have an issue, and hopefully we can actually resolve that, and we're knowledgeable to do so.
Good stuff. Good stuff. Okay. Thank you, Mika. Mika put the number and everything. Put the number in there for your agency.
Thank you, Mika.
Thank you, Mika. She is good for something. I'm acting like I ain't scared of her, but I am a little bit, though. Okay. Do you have a website that people can visit or social media?
Yeah, if they search me for Farmers, they can definitely find me through Farmers' site. But it is, again, the Bornelus Insurance Agency, and they should be able to locate us. Right now we're located in Dunwoody, so they can see the Dunwoody location there. We're looking for another location, actually, in Stone Mountain, so hopefully we'll have a location in Stone Mountain soon.
Good stuff. Okay. Thank you, Deacon James. He said amen. Well, I don't know who was preaching, me or her, but amen to you too, sir.
Yes, you were.
Okay. All right. Well, we're gonna go ahead and wrap up. And if there are any last minute questions, we're going to let you guys put in your last minute questions, and we'll be sure to get those answered after the show. So thank you all for joining us.
Thank you.
Thank you for watching today, and don't forget to share this for the people that can watch it later on. And have a wonderful afternoon.